speaking of the economy, it is time now for a look at the day's top business news. And for that, I'm joined in studio by Brian Quinn from the France 24 Business Desk. Brian, you are starting off with a look at the markets this morning as investors hope that a recent major sell-off could be coming to an end.
Indeed, Sharon, Wall Street has been taking a beating in recent weeks. The tech-heavy NASDAQ index is solidly in a bear market. That means 20% or more lower than recent highs, with the S&P 500 also briefly dipping into bear market territory. A big factor in that has been the U.S. Federal Reserve's tightening monetary policy in response to mounting inflation. The minutes from the Fed's most recent meeting, though, have somewhat reassured investors that interest rate hikes this year might not be as drastic as initially feared. That, along with some encouraging results from retail firms, sent the S&P up nearly 2% in Thursday's session, with the NASDAQ jumping even higher. Asian indexes trending higher as well in Friday's session, with Hong Kong's Hang Seng up over 2.25% as Chinese tech giants beat expectations in their most recent earnings reports. Tokyo's Nikkei on the rise as well, with shares in investment giant SoftBank surging there. Earlier, France 24 spoke to markets analyst Rehan Baysan about what's driving the latest rally.
May has been like a wild roller coaster ride, but mostly spiraling down. So let's recap a little. There was the Fed, US Federal Reserve's meeting in the beginning of May, and where they raised the rates by 50 basis points. And even though Fed's chair Jerome Powell said, tried to convince the markets that a more aggressive rate hike will not be on the table, markets were not convinced. And this week on Wednesday, there were the Fed minutes, which means the details, what the Fed members spoke on that meeting, and markets seem to be somewhat more convinced that Fed won't act aggressively as initially thought. So this gave a little bit boost to the markets, but it's very hard to say if this rally, so to say, for example, if we'll see a third consecutive day rises in the markets, it's going to be a tumultuous rest of May, it seems.
Meanwhile, though, concerns continue to grow for the future of the global economy, with the president of the World Bank warning that the war in Ukraine could trigger a global recession. The conflict is driving skyrocketing food and energy prices, with decades-high inflation hitting economies around the world, including in Germany, where growth has slowed recently. Joseph Keane has the details.
In trying to tempt consumers, on-sale signs are being displayed on windows in the centre of Munich. Since the start of the war in Ukraine, Germans are buying fewer non-essential products. The economic slowdown is being felt more in Germany than anywhere else in Europe. Inflation is now more than 7% for the month of March, which hasn't been seen for 30 years.
Despite the lifting of health restrictions, the war in Ukraine and inflation are having an impact on consumer choices.
The war in Ukraine has had three main consequences on the economy: a rise in the price of food, a rise in energy prices, and a shortage of fertilizer, of which Kiev and Moscow are two key exporters. The World Bank says these three factors could trigger a global recession. A slowdown is being felt in Europe, China, and the United States.
The central banks, in particular in the US, Eurozone, and Britain, face a most terrible dilemma, because inflation's getting up very high now. It's forecast in Britain to be 10%. In the Eurozone, it's already 7.5%. Now, this is unheard of.
The Chinese economy has been badly affected due to lockdowns, which have taken place in cities such as Shanghai.
We closed on March 31st and reopened on April 22nd. Nearly 70% of employees are back and have resumed work under closed-loop management. We've reached 70% production capacity.
With COVID-19 and the war in Ukraine, the World Bank has had to lower its projections. Global growth for 2022, which was estimated at 4.1% last month, has been cut down to 3.2%.
The UK, meanwhile, is rolling out new measures to help offset rising food and fuel prices. Chancellor of the Exchequer Rishi Sunak unveiled a £15 billion package on Thursday. 8 million lower-income British households will receive one-time payments of £650, while every household in the country will get a £400 energy discount in October. The move comes after the UK raised its annual cap on home energy prices, with households bracing for bills that could end up some £1,500 higher this year. The government plans to finance £5 billion of the package with a temporary 25% windfall tax on British oil giants, which have been reporting bumper profits lately. Downing Street had previously rejected a windfall tax, fearing it would hinder investment. And finally, for business, pop star Justin Timberlake has sold his entire song catalog to a copyright management firm backed by the private equity firm Blackstone. Hypnosis Song Management is set to pay an estimated $100 million for the rights to all songs written or co-written by Timberlake during his solo career and with the boy band NSYNC. The deal is just the latest in a string of music catalog purchases by Hypnosis, which is turning copyrights into investable properties. Timberlake becomes the latest artist to cash in on a career's worth of songs, following in the recent footsteps of giants like Bruce Springsteen and Beyonce. Cashing in there.
Exactly. I think Bob Dylan did something recently as well.
Yeah. Bruce Springsteen got like $500 million for his catalog.
So Justin's not earning quite that much.
Yeah, no. We're passing no artistic judgment on that.
Brian Quinn from our business desk, thank you so much for that.